Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the market rundown. So we pulled back today after the rejection right off of resistance or just above resistance on Friday. Not surprising to see a bit more pullback, but it wasn't significant. Looking at the hourly time frame, the bulls attempted a trend change where we had the low of the day, a higher low ended up forming. Actually, it went high of the day, low of the day, higher low formed, and then a little bit of a bounce at the end of the day. So we essentially ended with an hourly tightening range. And if that hourly tightening range breaks bullish into tomorrow, our daily higher low can very quickly be set, and we can be looking right back up at the August highs of the bounce attempt. And if that hourly equilibrium breaks bear, we're looking at a gap fill of 289.07, and then we're looking down at 285.25. 288 is the midway point of this range right now, and as long as the bulls are above that level, they have a slight advantage in my opinion. I'm well aware there is certainly tons of fundamental bearish narrative out there, but if it was as bearish and as bleak as everyone is saying it is, I just don't see how the price would be holding the August lows. So we could absolutely still see a bear break. That's certainly on the table. But until we break the lows of this August dump, the bears aren't proving anything to me. If we're going to see a significant reaction for the bears, we have to break that level. We have the FOMC coming up mid this month, and we may stay in this tightening range until that takes place. IWM on the daily chart, trying to form a higher low compared to 144.25. It too has to change the hourly trend. Low of the day, high of the bounce, and then the bell rang. So no real follow through on any of the hourly trend change attempt. What we have to see on the daily chart is the weaker names, IWM, XLF, and XBI, change their daily trends. So 144.25 was the low. We bounced to just form a daily lower high, and now we're needing to form a higher low at 144.25 and then break 149.97 to change the daily trend. If that does not happen and we drop down and hit a lower low on IWM or on XLF or any of these names needing that daily trend change, then of course it's going to be likely that SPY breaks the August range bearish. QQQ, bulls looking to hold 182.91 to keep full control. Clear resistance at 188.97. Same thing, we have to change the hourly trend or daily consolidation will continue into tomorrow. XLF, after breaking resistance, breaking the lower highs, we still have to confirm the trend change with the higher low and higher high. And in my opinion, XLF is going to be the most important as far as which direction the S&P 500 is going to break. If XLF can successfully change its daily trend, I believe SPY will break 294 bullish in a clear way. And if we cannot change this daily trend and we fade back down to the 25.92 double bottom, then we'll be looking at the bears still having a fighting chance to break the August lows. So all about XLF for the rest of the week for me. Can we change that daily trend? XLV, the healthcare sector, we are looking for a daily trend change as well. Have to hold support of 88.72 and break resistance of 91.09 to try and break this lower high pattern that we've been seeing over the last 3 weeks. XBI already dropping down towards support. 78.31 was that level, and we broke it by 4 pennies. So still a double bottom at this point as far as I'm concerned, but on the verge of more follow through for those bears. And again, a very clear downtrend. If we cannot change the daily trend on these weaker names, SPY bulls are not going anywhere. The VIX. So we're looking up at 2160. We pulled back from that level. Tightening range. The range that I'm watching, 2410, the low of 1550, lower high at 2160, higher low of 1710, lower high of 2120, and anticipating a break likely, I would say either Friday or Monday, we will see a break of this tightening daily range. And again, just to illustrate very quickly, the range that I'm watching that is tightening, it's right there, and looking to see if the bulls can form a higher low compared to 1710. Gold, daily higher low very clearly established at 1516. As long as the bulls hold that level on the daily time frame, they're keeping full control, heading up to test the recent resistance of 1555. Odds of it breaking are favorable for the bulls. The reason being, silver has already blown through its resistance and headed to a higher high. So the silver strength relative to gold continues to just fly. And at this point, the next silver resistance is pretty limited. We're really looking on the weekly time frame back towards 20 psychological. There is one level here that we're watching, and that is at 1930, which broke. So looking up now at 20 psychological, 1972, and then 20 psychological, bulls on absolute fire. Don't fight this trend. It is hype and euphoria. RSI levels can get overextended, moves can get blown out of proportion, and waiting for at least at a bare minimum a loss of the 4-hour uptrend to indicate daily consolidation, have to wait for at least some sign of weakness. So silver, bulls on fire. Gold heading up to test resistance. We'll see if the bulls can break that resistance level tomorrow. And miners benefiting from that. NUGT today got right up close to 44.74 resistance, but we did reject. The last thing the bulls want to see is a daily lower high and lower low. So if gold can get over its resistance tomorrow, then I believe the bull miners will be testing the high of the move that we've seen up to this point. Oil, I traded oil, the oversold bounce today. So this is my kind of bottom fishing play, where we have a clear support of 52.95 and we watch to see extreme RSI levels approaching that support. So we did end up breaking that support level by 11 cents, but not much bear follow through at all, and then a very significant bounce at the second half of the day, or ever since the morning essentially. So how I played this move, I stopped out break even initially, so I'll walk through it real quick, and I was trading UWT, the 3 times leveraged bull, and what I did was I made an initial entry, and I forget exactly what my price point was, but it was right around here on the initial bounce attempt. It was actually the 5-minute little higher low here. I made an entry, and as soon as we saw this follow through and a 5-minute trend change over 53.31, but we couldn't get any follow through over the exponential resistance, I instantly said to myself, okay, if we cannot get any follow through on the 5-minute trend change, we just cooled off RSI levels, and that tells us that a 15-minute bear flag is very likely. So I set my stop loss at break even. Normally I like to set my stop losses based on a clear support level, because if the support breaks, I want to get stopped out. In this instance, it was just break even. And the reason for that was because I was seeing signs that the 15-minute bear flag was the more likely scenario. And the last thing I want to do is start off the day and start off the week with a red trade. So I would much rather get stopped out break even, start back with a fresh clean slate, and take it from there. So we did have a bearish reaction on the market, S&P 500 and oil, to the manufacturing numbers at 10 a.m. this morning. And the 15-minute bear flag confirmed. So I stopped out break even, but I didn't give up on the trade because at that point I knew the hourly RSI was still 14. I knew we were still due for an oversold bounce. So what I did from that point is I watched this move and I said, okay, 5-minute exponential 12-period resistance is continually rejecting the price. So I'm watching that. And then it started to shape up as the potential of an inverse head and shoulders to me, where if we were going to change this trend, we needed a little higher low and a higher high. So at that point, I made my re-entry here, which on UWT was about 10 cents, 11 cents cheaper than where I stopped out at break even. And then we started to get some follow through. I ended up exiting half of my position at what I call a day maker. And then I exited the second half not too long after. Had I held on, definitely would have had some more gains there. But it was a scenario where you give me a day maker and I left and went to lunch and didn't have to look at a chart and didn't care about anything that the market was doing. I really like that scenario. So yes, in hindsight, could have taken half profit, set the other half at break even, and try and ride out that bounce a little bit longer. But in the end, bing, bang, boom, 40 minutes, day maker. Don't have to look at the computer and worry about anything while I'm out and about, getting off the screen for a bit. And then we'll take it with a fresh, clean slate tomorrow. So as far as this bounce goes, the hourly time frame for oil ended up seeing a solid move. And at this point, we're going to be watching for an hourly trend change. We have to set a higher low and a higher high to change this hourly trend. If we get more significant pullback, we'll be watching for an equilibrium to form, where we'll look for the higher low somewhere in the mid $53 range. And we'll watch to see how the hourly equilibrium breaks tomorrow, keeping in mind that the inventory report for oil is not tomorrow, it's Thursday due to the holiday. if the bulls do break the top of this move, 54.12, we'll zoom out to the daily time frame and we'll anticipate a daily inside bar will likely be the most likely scenario. So we're still watching this weekly tightening range. The most important support is 50.51, and the most important resistance for me is 57.43. And here we are, right in the middle of that range, patiently waiting for a break. So there's still some trades to be had within this range, but the range breaking is where we're going to be looking for a more longer-term trade with follow-through. Natural gas bulls keeping up the momentum in their favor. 4-hour time frame, nice uptrend. Our last higher low is 227.8. Anything above that level keeps the 4-hour uptrend in control. We're riding. Look at this 4-hour 12-period exponential support. The last 3 times we've consolidated, the last 4 times, it's held as support. That's a nice visual guide. And looking at it on the daily chart, we haven't consolidated on the daily since 212, so we know we're getting a bit overextended. But the bulls have their sights set on 250. My ideal scenario for natural gas, I've been talking about the lower high I'd like to see form compared to 250, and then a weekly higher low to have to form from there. But if these bulls keep up this strength, we may just have to settle for a daily higher low to form before the bulls make their way up towards 250 key resistance. So still being very patient with natural gas and not in any rush. Certainly a lot of bull trades to be had as far as day trades and short-term trades, but still undecided on the weekly longer-term time frame as to whether or not the bulls can just go straight from the low of 203 and break 250 without seeing any significant weekly consolidation. So overall, just patiently waiting on the S&P 500 to break its August range, anticipating that shorter-term time frames may be choppy while we're within that tightening range. Oil hourly equilibrium I'm watching to tomorrow. Gold and silver bulls still in full control. Gold just needs a little bit more follow-through for a higher high. And lots of opportunity in the commodity space, and we're only looking for that to continue into the fall and winter of 2019. Hope you're well, do good things out there, and we'll see you tomorrow. So garden update, we went through another big pile of wood slabs to make some raised beds. We'll head down there in a minute. One of my buddies made a sweet little bench out of some of the big slabs. We've got a little bird living in here, so whenever we're sitting on the porch in the evening and it wants to go to bed, it starts yelling at us and we have to leave, so it finds its little nest in there. So dug out some of the bed here to make a pathway for the cart and for people, and we'll have, once everything's fenced in here, probably next spring, we'll have a gate here and some kind of archway to trellis stuff up. There's a big patch here where the grass was killed from the mulch, so I'm going to plant a bunch of bulbs. I've never really planted bulbs as far as tulips and daffodils and all that. So we're going to have a goal of a ton of pollinators for next year, as there's a bunch of, well, planning on getting some bees, but there's a bunch more monarch butterflies around than I had anticipated, so going to get them some plants and such. Ended up covering all the old beds with cardboard as the manure was starting to sprout seeds, so I didn't feel like dealing with that, so just smothering that out for the time being. These are all the news raised beds. Big shout out to one of the Chart Guys members, Joshua, who lives an hour away, and he came out and was an absolute workhorse helping put these together. Got all the pathways, mulch, got some extra firewood and scrap. Lining the driveway with all this extra wood, number one, because I don't want to move it, and number two, hoping to put a line of sunflowers along the driveway next spring, and this will stamp out the grass and allow for that soil to get nice and ready for some sunflowers.